1 2 1 2. Okay. All right. So, um, can everybody hear me? Hold on, let's wait for the rest a little bit. All right. So, in our previous classes, we're talking about market structure, um, order block, and then fair value gaps. And then when I was talking about, I said something about the best fair value gaps are the one that you see within an order block, and the most valid order blocks that you can trade are the ones that lead to market like break of structure or shift of in market structure. Where, for example, if we have a downtrend like this, we have market going down, going down. We can see this is a clear bearish market structure. We have a clear structure that's bearish, right? And then the market just keeps making lower highs and lower lows, lower highs and lower lows. Market just keep making lower highs and lower lows. let me take away this watermark. All right, we have something like this where the market just keep making. We can mark this out. This is a lower high, a lower high. We have another lower high. Clearly, you can see this next lower high didn't take out the previous lower high. That's one of the characteristics of a bearish market structure. When it keeps making lower high, the next lower high will not be above the previous lower high. The next one will not go above the previous lower high. Okay, so we just see the market just keeps moving like this, right? We have lower highs, lower highs, lower highs. Now within these lower highs that the market just keeps making, right? Within these lower highs that the market keeps making, we're going to be having lower lows, lower lows. You can see this is a low, this is a low, this is a low, this is a low. And this low, of course, is lower than this low, and this low is lower than this low, this low is lower than this low. Characteristics of a simple bearish market. Bearish market, so we can tag this, always tag it, we have lower low. Okay. We have another lower low. We have another lower low. And then we're going to have the last lower low that the market will make. If the market is switching from a bearish market structure, this is a bearish market structure to a bullish market structure, right? And then we'll have a very strong push whereby price will come in and take away this previous or the most recent lower high. You see, when the market was coming down all this while, market didn't go above these previous lower highs. But after making this lower low, the market just push up very aggressively, closes above this previous lower high, setting a what we call a new a new higher high. Okay, because this new high now will be greater than this high, so it will be higher than this high. So we don't call it a lower high, we now call it a higher high in a bullish structure. Now, whenever you see this thing, whenever you see this setup like this, always look within here for an order block. I think we spoke about an order block yesterday and what really an order block is, but I will just rephrase it. Another block is just like maybe let's say huge sum of money, chunk of money coming into the market, but in fragment. And I use an example of our bank account. Let's say you have an account with a limit of let's say 10 million daily transactions, and you need to make a transaction worth let's say 30 million, and you have way more than that in your account, but your daily transaction is just 10 million. So what do? You now break the transactions into blocks like 10 million, 10 million, 10 million into 3 days, so that you can be able to send in the money that you need to send easily. So that's just what an order block is. So instead of these big boys coming into the market with huge chunk of money, creating significant imbalance in the market, what they do, they just break their orders into parts. You understand your point? So you see the first candle will come aggressively, the second candle, and then the third candle. It will now break above the previous lower high that we have when the market is bearish. Once you see that, just know like the market is about to switch from what bearish market structure to a bullish market structure. But then, when do you start buying when the market do that? And most important, this is going to be one of your A plus setups, or let's just say an A setup. We'll talk about an A plus setup later. This is an A setup in the market. When I talk about an A setup, I mean a very high probability playing out setup, which means when the market does this, there's a let's say 80% chance that the market will do what we want it to do. You can't hear me. Okay. Okay, okay. Let me fix this box. You can't hear me. You can't hear me. Sound check, sound check. Let me know if you all can hear me. Can you all hear me? My aux is working really fine here. I don't know. Okay, okay. Welcome, doctor. Okay. I can hear you. Okay, 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 good. All right. So let's continue since you can hear me. Let me know if you all can still hear me right now. Can you still hear me right now? Can you still hear me right now? Can you still hear me right now? I repeat, can you still hear me? All right. So I think we can continue, right? All right. Yeah, we can continue. So this is your A plus setup in the market right now. So I'm trying to just guide you all on an A plus setup. And that A plus setup usually comes when the market is just moving from a bearish structure to a bullish structure. And you can see in a bearish structure, this is what the market does. Lower highs, lower highs, lower highs, and lower lows, lower lows, lower lows, right? So then the market, what it does, it moves aggressively above. It moves aggressively. Okay? It moves aggressively. So when it move aggressively, and then we're going to have like a retracement down here, right? Whenever the market does this, this is a what? A high. This is a what? A higher high. Now, if you see clearly, this higher high is higher than this lower high. Okay? This is a sign that the market is about to switch from a bearish structure to a bullish structure. And this is your A plus set, your A setup. What do you do? Whenever you see the market coming down like this, all you have to do is carry your Fibo tool and draw it from this bottom. Since you are looking for a buy opportunity, you take it from the bottom to the top, right? Remember when we're talking about the Fibonacci tool, we're talking about like the two the discount zone that we have. Since we're going for buy, you want to have the best discount zone. And so we'll draw the Fibonacci tool from the most recent lower low to the most recent higher high. We're going to have our first discount zone. And we said anything below the 0.5 mark, which is this zone here. Anything within this zone is a discount zone and it's our buying zone, right? So, but we're looking for the best discount zone. We're looking for the, hold on, we're looking for the best discount zone. So instead of just buying from here, instead of buying from here, of course, you want the sellers to give you a very good discount because when you go to the market, you always want to find for the best discount. Of course, why not if you can have it? So what do we do? Remember the first discount, we took it from this low to this high. Now, if we're looking for the best discount, we'll take it from this low to this previous lower high. We'll take it from this low to this previous lower high. And how do we do that? We click on our Fibonacci tool. We drag it from the most recent lower low to the most recent lower high. So you see, now we can now adjust it in here. And then this is now going to be our entry zone. Now, it's not just about having your entry zone at the best discount zone. You want to know, is there an order block within this break here? This huge chunk of candlesticks, was it an order block that came out and set up that broke structure or shifted the structure? And within that order block, is there a fair value gap? Is there a fair value gap? Remember when we're talking about fair value gap, and I will just redraw it, I'll draw it again. This is an example of a fair value gap, right? I'm trying to show you all an example of a fair value gap. All right, let's assume this this is a candle pattern, right? So We're going to have another candle. We're going to have something like this. You can see this how like normally the candle are in the market and everything. We're going to have another one, right? And then this is where you see your fair value gap. When we have something like this, when we have something like this, I spoke about price always overlapping each other. You can see from this level here, price was overlapping each other. This zone here, you can see price overlap. But then when it comes to this zone here, immediately you get to this price zone, you can see there's a gap here between these three candles, which means price was not overlapping. This here is what we call a fair value gap. And we can just write it as an FVG, fair value gap. Please, as what the class is going on, whatever it is you don't understand, just always ask your question in the comment section. I'll be seeing it and then I'll be explaining it. And if after the class you still don't understand, I think I'll leave the video on YouTube. You can always go back and watch it for our next class. So these are fair value gap, and this fair value gap is an imbalance in the market that price delivery will always come and fill before it moves in our direction, right? So I'm going to explain that here. So I'm going to take away this, not that. I'm going to take away this line here, and then I will use something like this, right? We're trying to explain this as like, candle pattern, right? So you're going to see most times something like this, and then one that comes in and close above here, right? One that comes in and close above here. I can decide to add a pin, right? So we have a pin there. You see price close above, right? This was our previous lower high. Price broke it clearly. So we have a new market structure shift because this is an order block. You can see it. After we have a sweep here, market moving with an order block and broke the previous lower high. After doing this, all what we need to look for, we need to look for a fair value gap within this region. We need to look for a fair value gap within this region. Okay, let me make it way fun. I can pick this here, or why not? I can take this like this, right? Of course, we have something like this. So you're going to see something like this. This is going to be your A plus setup. This is going to be your A plus setup, right? Immediately after I explain this, and then we'll go back to the chart and look for something like this, right? So this is going to be your A plus setup. And when you have this, you can see your fair value gap here. Now, let's draw a fair value gap. This is your fair value gap. And you can see your fair value gap falls within your what? Your discount, your best discount zone, and it's within an order block. All you have to do, just take your sell, your buy, sorry, you take your buy, and then your stop loss is just directly below this previous low. That is all, and aim for the previous higher high. That is just it. That is just it, right? So now let's go and look for something similar. Let's go through the chart and look for something similar. I saw something on Euro AUD, right? I saw something on Euro AUD. Was it today or yesterday? Okay, good. Look at Euro AUD, 15 minutes time frame, right? Look at Euro AUD. On Sunday, I spoke about this on the WhatsApp channel where I said this whole week I just want to be aiming at Euro AUD and GBP Canadian dollar, you can see, look at the market structure. It has been bearish. It has been bearish, making lower highs and lower lows. Maybe we can start marking the lower highs and the lower lows, lower highs and lower lows, right? It's good we do that. So let's do something. We can start marking. Let's mark it from here, from this zone. Let's start marking our lower highs and lower lows because it's bearish, right? And then after making this, just always remember on a bearish trend, on a bearish market structure, after the market makes a lower high, the next leg, that same leg that made the lower high, when it starts coming down, is going to make a lower low. Okay, so we have a lower high here, right? So we have this and this. This is not going to be a lower high because this lower high is still the leg that came up a little bit and broke this previous low that we have here. So we're going to use this as our lower, right? We're going to use it as our lower low, and then we have a new lower high. We have a new lower high here, where this lower high now broke this lower low and set up a new lower low. And then we have a pullback a little bit that made this lower high. If you notice, like I said, on the bearish market structure, price will never break the previous lower high. Always notice, this is 15 minutes time frame. I'm doing this analysis on the 15 minutes time frame. Price will never go above the previous lower high unless maybe when we're going to have a shift in market structure where the market is going to move from a bearish structure to a bullish structure. So I'm just trying to show you how to get your A setup. And your A setup is usually when the market is about moving from a certain structure to a certain structure. Maybe probably from bearish market structure to a bullish structure, or from a bullish structure to a bearish structure. So we have this lower high, and then this lower high came in and broke this lower low and set up a new what? Lower low there. So we have this. So we're going to use this. And then this leg came up and set up a new what? A new lower high. And then this lower high set up a new lower low here. And then set up this. You can see how I'm drafting this thing. Can you see? Lower high, lower high, lower high, lower high, lower high, high. Lower low, lower low, lower low, lower low. This is a bearish market structure. You see, the market just keeps going down. It keeps going down. And then we have a new lower low here. After the lower low, it went up, set up a new lower high. Right? And then this lower high set up a new lower low. After setting up the lower low, is a pullback, reverses a little bit, and then we have a new lower high. And this lower high, it broke this zone. This, 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 right? This, now I want you people to understand. I spoke about this whole kind of pattern yesterday when I was like, before you can consider this as a new higher high. The candlestick has to close above this lower high that we have. Like, look at the example that I drew here. No, was it here? I think that was it Euro USD? Okay, good. Euro USD. Look at the example. Look at the example that we have on Euro USD. Can you see? And then this one that closes above it. Okay, we have this one that closes above it. So your candle, your other block candles have to close above your previous lower high to consider that a most valid market structure shift. If it's just weak, for example, let's say this is what close above it, like this week, like this, no, this is not a valid break of structure because this is just a week. Okay, so you have to see something, a strong candle that closes above it, like something like this. Clearly it closes above it. After it closes above it and then it starts coming down, that's your valid break of structure. That's valid. Okay, so let's go back to our euro and AUD for our analysis. So right, so this is where we are now. So that's what I was talking about here. You can see there was nothing. This is just a minor week. We don't consider that. We don't consider that. Okay, so for that I can still consider this whole place here even, because this is just like relatively equal highs. Okay, relatively equal highs because it's just a week that just went up and swept some liquidity, came back, and then this was when it broke it fully. You see, that is where this candle closes above it. Now this our what most valid break of structure. Okay, but now this break of structure, this shift that we have here, it did not start off from a liquidity sweep. Okay, it didn't start off from a liquidity sweep. What do I mean by that? Let's come back here to our euro USD and I'll explain it. Right, we do not have a lower low, most recent lower low that just went up and broke the previous lower high. That was not what we have. Okay, it wasn't the lower low that immediately went up the leg and then broke the previous lower high. No, that was not what we have in euro AUD. That was not what we have in euro AUD. You can see it. It was not from this leg. It was not from this leg, this particular leg here, that just moved on and just broke this previous lower high. No. What happened was like it came here, came back, and then went up. And then it came back. Now look at this. After setting up this, right, grab some more liquidity, came back, set up a new low here. After setting this low, look at these other blocks. These are clear order blocks like what I've explained earlier. Look at it. Solid, strong candles, they're just moving. One, two. If we go to this some maybe 1 hour time frame, you see that these are like 3 candles that moved in and clearly broke the previous lower high. Can you see? And within this order block, you see our fair value gaps. So what do? We carry our FIBO tool, we measure it from the bottom here to this top here. I think let me do something like we have our higher high, which is HH, right? So we have our higher high. So when the market is coming down, market is going down, we just bring our FIBO tool, here to here. We have our first discount zone. We're looking for the best. And since we're looking for the best, we'll now take it from this lower high that we drew to, we'll take it back to this most recent lower high, sorry. So we have this from the higher high to lower high. So we have something like this. And then you find out that our fair value gap is within this region. So this is where we're going to be waiting for our price to come back in. So when price was coming down, just wait. You can put your sell order like this and wait for price delivery to come back here into this zone. So I can delete all these, right? Now I can just expanding this, keep expanding this. Now you can see for the fact that price did not come back immediately, don't worry, don't worry. Since price did not come back immediately, of course, we can just do something like this. We know this whole place, there's a lot of liquidity below this, resting below this zone, where we expect price to come back, filling. And when price is coming down here, this fair value gap here within this other block that we have here will attract price to this our entry spot. So you can set in a pending order in such kind of markets and just leave it and just continue trading other trades. That you can do, of course. You are allowed to do that. Okay, and then the market just keeps moving up. All we need to do, we're just waiting for price in here. This is just our simple setup that I spoke about here. This is it here. This is it. This is it. That's what we have. This is it. Nothing else. Can you see? Euro AED. That's what we have. So that's what we're expecting. I am expecting that in Euro AUD. So you can see the market is already coming down, coming down, coming down. I'm expecting price to just come and tap in this our zone, and then we are good. Now let's go and look for something else on another chart. Okay, on another pair. You can look for something else on another pair. Please, whatever it is, if you're having difficulties, just make it clear in the comment section, and then I will try and explain it. So let's check for orders. Okay. Okay, look at this. We have a bearish structure. We've been having a bearish structure. We've been having bearish structure, bearish structure, bearish structure, bearish, bearish, bearish. And here it boom up, took out this in. Of course, we're expecting a change of market structure. We're expecting the market structure to shift. And then boom, look at this solid straight candles that came in and sweep this point here. And if you look at this here, this is a fair value gap. Of course, you took in the trade, and then the market came, stop you out, and then the market move on in your direction. It's okay. Sometimes you see such kind of event unfolding in the market. It's okay. It's okay. You won't have 100% in trading forex. Okay, you won't have 100% trading forex. So sometimes your A plus setup or A setup will be violated. Okay, maybe out of 10 trades, you see like twice, two times your A plus setup is violated, and it's fine because there are a lot of things that cause that, which is one of which is fundamentals. When I mean fundamentals, is news. Okay, fundamentals is news. That's one of the things that could cause your setup to fail once in a while, or manipulations. You understand the point? It's okay. So once you stop that, it's okay. Just move on. Leave. You can just leave the whole setup for the day and just move on to something else. So let's keep checking. Let's check. Let's check. Let's check. I'm trying to get maybe that one that was on a bullish structure that moved to a bearish structure, and then we have here's the Canadian. Here's the Canadian is bearish. It's bearish. Let me look for. I'm trying to get something else that will solve that. Okay. So, like I said, this might not be what you guys will be trading, because after this whole class and everything, I will teach you guys the real strategies, different strategies that you can be using to trade. I just want you guys to have a basic knowledge of this whole stuff, this whole market structure thing, order block and fair value gaps, so that when you're trading with the strategies I'll be teaching, um, this whole foundations that I'm giving you guys will be a solid stuff for you people. Okay, for everyone here. So let's just keep checking. Uh, Nothing here. Check some more. Nothing here. ADJPY. Let's check ADJPY. ADJPY. Uh, really? I'm trying to hunt for pairs that were on bearish structure, and then we have a break of a solid market structure shift with order block and then fair value gap. Look at this. This is ADJPY. Look at your order block. Look at your order block and look at your fair value gap. So I can just mark this zone and see if price delivery came into that zone. So you can see price delivery, of course, it came into that zone, but then from this our entry spot, you hit in like let's say 22 pips, and then the market reverse. Of course, at 22 pips, you can decide to break even your trade. You can decide to break even your trade. So this might be a win trade for those who decided to maybe have a break even or something like that. So, but let's just leave that. Let's keep hunting for. We'll keep hunting. We keep hunting. All right. So I think for the shift from bearish to bullish, I'm very sure that most of you understand. Please let me know if you understand. You can say understood in the comment section, so I can know that everyone understood what I was talking about, what I'm talking about here, from the bearish structure to a bullish structure, the shift in market structure. Please, you can just type understood if you really understand it. If you understand it, please say understood. So I can now move into the bullish structure to a bearish structure market shift. Okay. Please, if you understand what I'm saying here, what I'm trying to explain here, please just comment there and let me know. Let me know. Okay. All right. Likewise, when we're having a bullish structure, right? When we're having a bullish structure, when the market just keep moving like this, making higher highs and higher lows. This is higher, this is a high, this is a low, but this low is high. A new higher high, higher than this high, right? Followed by a new higher low, which is higher than this low. That's for the bullish structure, right? For the bullish structure, we have this. We have this. we have this. This is what we have for the bullish structure, right? We have higher high, higher high, higher high, higher high, and then higher low, higher low, higher low. Because this low, of course, is higher than this low, and this low is higher than the previous low. So when we have something like this, it's just the opposite of what happens on the bullish, on the bearish market structure, changing switching to bullish structure, right? We're going to have a solid order block that just crashes down, take out this low, right? And then we can just call that market structure shift, MSSS, right? And then within this order block here that led to this, we're going to have a fair value gap where we're going to expect price to retrace into it and then go down. Because if we're looking for a sell here when the market is down, we're just going to pull it from the top here. Our first discount zone and our best discount zone is going to be around this zone. So you can see, you see something like this. So we're going to see something like this. So anything within this zone is our selling zone. Our stop loss right here above this most recent high, and then our TP below this low. That's just it. Okay, can you explain how to pick that fair value gap on live chat? I got example you gave, but didn't get the fair value gap you drew on the chart. Okay, fair value gap. Let's check. Let's see. Now, this is just an example of a fair value gap, right? This is it. Let me zoom in. If you look at all these candlesticks, they are all overlapping themselves, either with wicks or no without wicks or solid close. And then when we get here, we can mark this wick here, this candle wick. I told you fair value gaps are always seen within three candles pattern: first, second, and third. And the fair value gap is usually within the second one. So we have the first, the second, and then the third, right? We drew the pin that overlaps the second body on the first candle, and then we do that for the third candle too. Good. So you see, when you see something like this wick did not overlap into this body, and this one did not overlap into this body. There is this space here. This space here is an imbalance that we call a fair value gap, where we expect price to come into in here later in the future and then continue moving. For example, there are some chart that you see some pins like this, and then you see, so you can see this pin is overlapping. If I decide to bring this pin here, you can see they're overlapping themselves, so there's no fair value gap there, there's no imbalance there, everything is filled up. Everything is filled up. That's an example, but for here you can see there's this piece here. That is our fair value gap, or we call that an imbalance in the market. Can you see? Now look at this one again. Look at this pin, the first one, and then the third one. Look at the pin for the third one. Do you see? Look at this whole space. This is what we call what? An imbalance. Please let me know if you understand this whole concept right now. If you still don't understand, I can look for another pair, and or I can just switch to like maybe a different example. Now, this is what I was telling you, that fair value gaps, what they do, they always attract price. So look at what the price did. All this movement, and then we have a solid wick that came into that fair value gap, and then continue going down. Did you see that? Since this, a lot of traders out there might say, oh, this is not within an order block, or we don't have a market structure shift or all this stuff, so we can just call this a liquidity void. But regard whether you call it a liquidity void or not, this is still an imbalance in the market that we still expect price to come in and fill. So let's try something and see if we're going to get our sell zone from the first class that we did, getting if you're in a bearish structure, how do you get your retest and then short? So we have the first discount and then the best discount. This is our best discount. Did you see? Within this our best discount, I can take this guy out. This is where we're supposed to have our entry. And this is where I said our TP is always below this low. Our take profit, we can put our TP above here or just above these pins of this fair value gaps that we have here. I can just make it a little bit here. So this is just it. You can see our best discount zone, we have a fair value gap within our best discount zone, where if I zoom this whole candle, I don't know if you guys can see the pin, but let me try and adjust it. And symbols for pin body wick, um red. I'm trying to change the wick body so we can, okay, good. All right, good. Can you see price just came in, tapping our wick, our entry spot, and then just went down. That's just what I've been talking about. Please, I don't, does the imbalance imply favor? Exactly, yes. An imbalance is just another way of saying a fair value gap. Do you understand the point? A fair value gap is just an imbalance that price will always come back and fill. It's an imbalance. Price will always come back. Price will always be attracted to it. If the market is bearish, right? The market is bearish. What you have to do is you just have to look for, if you're taking the short after retest, just look for a fair value gap position and just taking yourself from there. That is just it. Sorry, please, I want to know if you really understand, if you guys really get the whole concept of this fair value gap and everything. All right, so let's check out another pair. Let's try and look for, let's go and hunt for some stuff. Let's check on Bitcoin, right? This is one of my Bitcoin sell, one of my Bitcoin sales. Okay. Ladies. I think that is just it. That is just it. I don't know. I think everybody, okay, good, good. Do you understand it right now properly about the fair value gap, imbalance, terminology? Fair value gap and imbalance, they're just both terminologies, okay? They just mean the same thing. It's just like when in the trading, when traders say liquidity, when they say, oh, that's a liquidity spot, or let's say that's a money spot, you understand? Liquidity just means money where there's a lot of money activities lying down there, or stop loss. You understand? You can just see order. Sometimes it might be orders, it can be liquidity, it can just be stops. Those are just same the same terminologies. Okay. Because sometimes the market makers can just do move, take in orders, deceive buyers, like the market is going up and then they move in the opposite direction. They pick their money and went to their stops. That's also, they just grab liquidity and move. It happens a lot of times, right? So GBP Canadian, do we have anything in GBP Canadian? All right, let's check GBP Canadian and let's see what we have. Let's go to our 15 minutes time frame. Like I said, the best time to always trade these setups, 5 minutes or 15 minutes. Okay. if the market is so noisy in the on the 5 minutes time frame, you can always switch to the 15 minutes time frame so that you can have a better view of what is happening in the chart. So mm, and always when you wake up, you check your chart, and then maybe you don't see something. Of course, just leave it. Just move on. Look for a different chart and try and see if you can get in something from there. If you can't get in anything from there, just leave the chart and just that's your day off. You don't have to trade every day. Some days you can just come up and just say, "Oh, this is my day off. I do not have to trade today." That's discipline. Okay, that's discipline. Some of those days you come up on, you wake up and then you check that and say, even if you're seeing setup, you just say, "No, I don't want to trade today." Regardless the setup I say, I do not want to trade today, and that's cool. That's cool. So I'll be stopping this class right now. I think that's the end for today's class. So by tomorrow, I think we'll start talking about something else. Okay, we've been talking about the structure and then shift in structure, getting that order block, fair value gap within the order block of shift, break of structure and everything. So from tomorrow, I think we'll start talking about something else. I just need you guys to understand this foundation. Okay, I want you guys to understand this foundation, and then I will be setting in something for tomorrow. And this that stuff or that idea I'll be talking about tomorrow is the weekly market structure and the daily market structure. There's a pattern. When you look at the chart every day and every week, there's a pattern, there's a routine that the market does. You understand? And if you're not paying attention, you might not understand what the market is doing. Okay. If you're not paying attention, like I said, you might likely not understand what the market price is doing, what price is doing that day. Okay. So that's what we're going to talk about tomorrow, the weekly structure pattern, or let's say the weekly pattern and then the daily pattern. Once we do that, then I think we're done with all this, and then I will give you guys the real strategy that you can start trading with. Okay. So I think that brings us to the end of this class. Thank you everyone for joining. So if there's something you don't understand, you can always the video will be here, so you can always watch it and understand it properly. So